morning, the Bank of Canada's second in command took aim at Canadian productivity, noting that weak business investment and a lack of competition are limiting the future for Canada's economy, that improving efficiencies would be one of the tickets towards faster growth for our economy, for job creation, and for higher wages. Derek Holt is joining us now with some perspective on all this, Vice President, Head of Capital Markets Economics at Scotiabank. Derek, you already wanted to talk about productivity today, and here we have the Senior Deputy Governor talking about the challenges we've had. In your opinion, first off, why have we had such a productivity challenge in this country?
Yeah, that's a complex debate. And I'll start with what I liked about what the Senior Deputy Governor said this morning. I like the fact that they're providing profile to an important topic. Up until now, they've tended to mix it into press conferences and bury it into speeches. Now it's a full-on speech saying it's an emergency and it's urgent to address this. I also like the fact that they're saying why, because it's tough to get inflation under control if you have such weak productivity with workers getting paid so much in terms of wage gains, given some of the evidence on that count. I also like the fact, and going and more directly answering your question now, that the Bank of Canada resisted the urge that exists out there to blame the new arrival of immigrants to Canada in terms of the population surge. I think it's very premature to say that declining real GDP per capita or GDP per hour worked is because of this population surge. This is a multi-stage experiment. The next stage is how do we integrate all these new arrivals? And that doesn't happen overnight. You don't come to a new country and immediately get your foreign qualifications certified and get a job and start a business and find a place to rent or buy a home and consume and drive economic activity overnight as soon as the population switch gets flicked on. That happens with time, especially in a country like this. So let's reserve some judgment. And I liked that fact. However, there are a lot of things that I didn't like about the speech. And number one was I thought it fell short in answering your question on the explanation behind why we've had weak productivity for so long. Basically, we heard yet another Ottawa type saying it's all the fault of businesses. It's all because there's not enough competition and they don't invest enough. And I think that's extraordinarily unhelpful. It's divisive in nature. I'd like to see more of a discussion on the role of public policy, including the Bank of Canada. Maybe they held interest rates too low for too long and always came to the rescue of the housing market and short-term consumption, driving 15 years worth of current account deficits, excessive spending domestically financed by foreign capital, with little left over to invest. And to the point to which we've got 86% of GDP now in this country, the highest since the late 1980s, early 90s, that goes towards spending on consumption, housing investment, and government spending. And so I think there's much more under the hood here than what the Senior Deputy Governor alluded to.
So if we were looking for a solution roadmap, I like to thank you for addressing some of the considerations there, but everyone wants to talk about a path forward. If we have so much of our economy that is tied to housing, that story doesn't change when home prices are as high as they are. It just further seems to complicate it, especially when we're still having this conversation about not enough supply. So you have this big albatross that is our housing market in holding back productivity, some would argue. How do you get around that? How do you make fixes, at least on the margin, or maybe in a more meaningful way down the road?
Sure. Okay. Well, I think the first thing is to temper expectations. This has been a long building problem. I've been a practicing economist for almost 3 decades now, and we've been talking about Canadian productivity being underperforming throughout that whole period of time. And so we have to be a little bit patient, but I think there are some constructive things that we can point to that could help over time. Number one, let's tear down some of the interprovincial trade barriers. Let's make it easier for new arrivals to qualify in this country and to get labor mobility from across regions and across industries. That would involve critiquing some of the provincial governments that the Bank of Canada would be loath to do so, but I think it's important to address this. Secondly, we let our relative tax advantage on the corporate side of the picture erode and become eliminated, basically, by what happened in the United States and the fact that Canada's much of its advantage that had previously built up has been eliminated now. And so that's a disincentive at the margin to invest relative to what's going on in the United States. It's also possible that we should perhaps cool the extent to which we're overstimulating the short-term consumption, short-term government spending side of the picture, and leave a little bit left over to invest at the margin. I think we can also address the fact that perhaps we have to revisit how we incentivize different sizes of business small versus medium versus large, given a lot of Statistics Canada studies by John Baldwin and others in the past that have said that Canada has weaker small business productivity than big business like the United States, but we have many, many more smaller businesses than the United States as a share of our business community, and we incentivize them to a great degree, which is wonderful in many respects. They're important, vibrant source of the economy. They can be tomorrow's leaders, but at the margin, I think we need to have a fuller debate on what we're doing in that area as well.
Okay, and at the end of the day, if the goal is to see people who can be, let's face it, wealthier, and I think the comment from the senior deputy governor was, if you get things right, regardless of any critique she had for the input issues, if you get things right, people can have, higher wealth, higher wages. What do you think is the ticket towards higher wages?
Yeah, absolutely. I think that she's right in saying that in the longer run, most economists would say that higher wages can only be supported by higher productivity. And Canada has been violating that tenet of economics for several years now. Since the start of the pandemic, if we were to index wages to just before the pandemic started, they've outpaced inflation over that period of time if we were to index CPI to that same period. So I don't buy the makeup pay argument. And at the same time, that real wage gain that's been ongoing over that period of time has been in defiance of the fact that productivity has been declining. And so I have to ask, why are C-suites allowing their workforces to get that pace of wage gains in relation to their shareholders' interests? And what are we doing in terms of the collective bargaining tendencies in this country with 1/3 of our workforce that's unionized versus 10% in the US, and those wage settlements numbers in contract negotiations are exploding. 9% gain in the first year, averaging double the Bank of Canada's inflation target over the full 3 to 4 year period of those contract settlements, and another round of data pending this week. And so we're not going to get productivity and living standards under control, or rather, we're not going to get living standards under control until we get productivity matching the kind of wage gains that we're getting in this country.